Welcome to Trading Lounge and the S&P 500 for the 25th of June. And starting on the daily chart here, as you know, we're counting from wave 4 here, up for 1, 2, 3, 4, 5 for 1 here, and then looking for an A and a B and a C wave for wave 2, and then looking for 1 and 2 and 3 and 4 and 5 and to the upside. Now, there is a dark cloud hovering over humanity, and that that cloud feels that the market can crash from this point and move much lower down through here. And of course that's possible, and what we will do is we will just take one step at a time, one level at a time, one wave at a time. We'll try just to stay with the evidence of everything, and when we see a trading opportunity, we'll take that. Now, on the 4-hour chart, to move in here a little closer, we're looking at it like this here. Let me just get this into perspective here. So this is what we're looking at here. Now, will it go down to the 50-60% retracement level? Possibly, because I feel that in the futures market here, that the wave, we're looking for 5 waves down here. Now, it's stuck here at the moment at this current low here because it's the 61.8% retracement level from that low to that high here. And in fact, you know, these highs here on this chart here on the, looks like this one's the lowest one here, but in fact on the cash market, here, those, when we look at those highs here, we can see that that's not the case. We can see that this one here is the high here. So and as yesterday, well, anyway, I'll stay with this point here. So that's the high here. So just thought would bring that up. I'll come back to this chart in a moment. So as it goes at the moment, we're looking at from wave B, because normally there's a relationship between the distance of wave A and wave C here, but it pulled up to the 61.8% retracement level across here somewhere. So it's likely that it can extend down here now. If this came really high up here, then it wouldn't come all the way down through here. But because it's done all the right things for an A and a B and a C, we can get this one here that will be 61.8% longer than wave A here. So we'll keep that in mind. So the first thing here is that we're looking for 5 waves down, which would bring us into the 3,000 major trading level, and we'll see a strong bounce off that. That will take us back to the 61.8%, which we will look at now for that. So all things being equal here, we should see wave 5 come down through here, then an A and a B and a C, which the 61.8% is back at 3,100, the minor level there. So it won't just go straight through here either. There'll be, there'll be a little battle on the main front here for that, but it can rally back up to here. So we need to be mindful of that. We have short trades in at the moment, so we'll look to protect what we have here, and we'll try and go for this target down here at 3,000. We will exit at this point, and then we'll just observe the rally. We don't want to be really involved in it too much because it may not go back to here, and we just really want to have the right mindset, and a mind that's ready for this third wave coming down through here. So, and let's go in a little closer and look at this structure here. There's a bit to talk about here. It's quite simple when I just look at this here in terms of we've got wave B up here, so I'll just push that up through there. So I am counting it down as 1 and 2 and 3 here and 4 here and 5 here, and for wave 1, and then wave 2 here for this one, and then nice third wave down. We can have a look at these structures. Wave 4 here, this is the 38.2%. So from wave 2 high to low 3 here, 38.2% is where it is here at the moment. So we know wave 4s can get a bit complicated, and it's doing just that. but once it finishes flopping around there, we should see it move down in 5 waves here to the 3,000, and then we'll see our bounce off this level here. So this, we want to take profit. We'll talk about the trade now. We want to take profit at this particular level down here for that. Or close to it. So, yes, our trade was in here. We were looking, yes, we were talking yesterday about the 3120 here, and it becoming the retested resistance here. So it's a little bit tricky to see here on this, but basically the market came through the level, went back up and tested it, and then dropped lower. So that was our entry on that low here for that. Okay, so what I'm doing now is I'm moving the stop down I'm moving it above the, this is all of group 2 here. We're dancing at the midpoint at the moment, the 50, and the next levels up is group 2 here, 65, 72, and 80 here. So I want to put the stop at 3, you can put it at 3074 or 3077 for this. There may be another little move up here for this. I'm looking at this here, we'll look at it on the tick chart. I'm having a little bit of difficulty in nailing it, all of it down. I can see some of it. So we might want to put that at 77 here, but you can put it at 74, but we wouldn't want to put it any closer than that. We just really want to get down to this point down here for this. There is a bit of a spanner in the works with all of this. So when I go to the tick chart here next, this is 100 ticks. Sometimes I use 20 ticks, so we'll need to bring more data into this here. So yeah, a couple of other things I need to yak about, but so with this here, we're looking down at wave 1 here and 2 here for that. And yesterday we counted 5 waves in here, so we pulled that apart. And then this one here, we've got 5 waves in this one. That's pretty clear. This one's a little bit trickier, but we can look at this as wave 1 here and 2 here, then 3 here, ABC for 4 here, and then 1, 2, 3, 4, 5 down here with 5, another little 5 waves in here to finish that off. So I am having a little bit of difficulty with this particular structure here. It is corrective, so I'm happy with it being a wave 4. It's corrective because we've got, well, first of all, the obvious one is we've got this move here in 3 waves here. So it's a move to the upside that's in 3 waves. So it's, the pattern makes it all corrective. There's just a few little things that I'm not sure about, and this one bothers me here because from here we could look at this as an A wave, a B wave, and a C wave to here. So that means the top will be taken out here. So this is why I've just put this little trend line in through here, hoping, not a very good thing to do in the markets, is it? But we all go through that now and again. So I'm thinking there's a couple of things here, is that we can see that it's sitting on the midpoint, the 50, and then we know that this is group 2 here, the 65, 72, and the 80 here. So I'm just hoping that the group 2 here holds it in as wave 4. Now we also know too that the 38.2% retracement level has also been met as well here. So from the midpoint here, we've got the 38.2% retracement level that come through here. So it's not this 40%, 38. It's not the beginning or the end of the world or anything. It's just a rule of thumb. But sometimes it's hauntingly, accurate, down to the dot, and other times that we'll see this rally after a big drop back to the 50% move. So, yeah, we've got to put a stop somewhere. We can't allow the market to get away on us to the upside if I'm wrong. One of the things that bothers me a little bit with all of this count here is that this particular move down through here, if we just, this is on 1 hour at the moment, if I just put it on to, let's just put it on 5 minutes, see what I can see here. Yeah, so in this market here, I might have to go to 1 minute to show you here, but just counting backwards from wave 5 here, so we've got all this down for wave 5 here in 1, 2, 3, 4, 5, and so we've got third wave here, and this will be the third of third. So we've got basically 1, 2, 3, 4, 5 here for wave 1 and 2 here, and then all of this is a third wave, fourth wave, and fifth wave. So the cash market is actually counting down as 5 waves down. So that's sort of bothering me a little bit. So why won't that come across? Just double checking it on a 1 minute chart. So I can see 1, 2, 3, 4, 5, 1, 5, 5 here. So we've got wave 1 to here, and then 2, and then this is all this here is the third wave here, and this is the gapping in the third of third. So in this case here, then you can see 5 waves in here. So in this case here, it appears we've got 5 waves down here. This is what's sort of bothering me a little bit, but I don't see that on the futures market here. I can see that this is also corrective in here. So you know, yeah, it's just a little bit annoying. So that's why I've put the stop at. I've had to take a viewpoint that I had to find a balance in my analysis. So I would like to get down to here, but how much am I prepared to risk to do that? So where should I put the stop? So if on the cash market this is 5 waves down to here, then we're going to come back to, well, down to this point, we can come back to the 61.8% here on this. So that will bring us back to break even, and then we've lost our pocket money, you know. So yeah, so I'm just taking a balanced view. So I'm going to go in here at 30.77 for this, and we may get stopped out if we end up with a wave 2, and then we have to get back in again. I just don't want to lose most of what we've got. I've got to come to some point here with all of this, and yeah, and let's just see if we get down to this point here. The other thing that I want to go back over is one of the mistakes that I made, and I don't know why I made it, because I never make that kind of mistake, is that when I see spikes in the market, I always ignore them. I know that they're real, and I know that they can take out your stops. I know that you can profit from them, and so on and so on. I just find them annoying. And the thing is that when I count, I always disregard them, and I didn't disregard this one. I don't know why that was. I had my head in the wrong place, but if we disregard the spike here, then we can count up as 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for third wave, fourth wave here, then the 1 and 2 here, and 5 waves here for 3, 4 and 5 here. So anyway, I just wanted to go back over and give myself a gentle reminder that I made that error there. But anyway, that's it. So I think one of the main things that we also need to take on board here as well, if I can just go to the 4-hour chart here, is this first wave coming down here is cool, and it would be nice if we do come down to the 3,000 and bounce off that in 3 waves, and that will be a 5 wave, 3 wave, and 5 wave structure, and then we're going to get 5 waves down here and 3 waves back up, and then we're going to come down, and we're going to come down hard, because this third wave here, this will be in 5 waves here, so it'll be 1 and 2 here, and 3 and 4 and 5. So this third wave that comes in is going to come in hard and fast, and we need to be on it. So what I'm suggesting is try not to lose money in this wave 2 rally here. Okay, it's nice to have a clear mind. You know, if you're trading this and you're trading up here, you're worried about where you're going to take profit and so on and so on. you don't want your head in that space. Your headspace that you need, the mindset that you need, is to be thinking about this larger drop here and how you're going to approach it. What's your plan going to be? Where are you going to enter? How much are you going to risk on it? You know, you need to have it all mapped out at that particular point here. And it's not always easy as you think, because when the market's, you know, starts the third wave down, you know, you've got a series of ones and twos that come back, you know, quite sharp like that, to, you know, so you need to trade less if you're going to, you know, you need to be adding on these tops. So you need to be trading less. If you normally trade, you know, whatever contracts you trade, I mean, CFDs or futures are all, E-minis are all different, but you just need to trade a lot less in the beginning of the trend, but just keep building into them, and then we'll catch this large one coming in through here, and we'll discuss this a lot here when it comes to it, because we need, this is payday, this one here. Alrighty, that's enough waffling on. Thanks for tuning in and appreciate the support. Cheers.